welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma, and a short while from now, Cheryl D'Souza will also be joining us. And we should welcome back Cheryl after a bit of a break. And let's have a look at what the markets are up to. Firstly, onto the show, because once again, we are seeing the bulls taking the charge of the markets, and especially the financials taking the lead, wherein Nifty Bank is outperforming the Nifty 50 index, wherein Nifty Bank holding a gains of 0.6%, led by the likes of Bajaj Finance, Axis Bank, as well as Kotak Mahindra Bank, all seem to be rebounding in the trade. Wherein comes to the Nifty 50, taking it up ahead, that 18,200 level is taken positively. We are holding up a gains of around 51 points right now. And if we look at some of the other movers in today's trading session, then Bharti Airtel, we did see the stock was holding itself in the green after the Q4 earnings, and today itself the stock is up by 1.2%. Other than that, Tata Consumers as well as Hero MotoCorp and even NTPC before the earnings is holding up itself with 0.8%. Onto the losing side, we have Divi's Lab, Adani Ports as well as M&M as well as Grasim. All these counters trading in the red, but look at the breadth of the market. That is surely favoring all the bulls out there. Around 1,346 stocks in the NSE trading in the green versus 664 stocks that are in the red right now. But let's go across to Cheryl. And Cheryl, welcome back onto the show.
Hi, welcome. I'm welcoming myself back on the show. Thank you so much for that, Shrishti. And I hope you guys missed me, because the markets clearly in the week that I was on break, we saw the near touch for all-time high levels for the Nifty Bank. And you have Nifty that's holding on to 18,200. Looks good to see Nifty steady where I left it.
But I could see that a lot of viewers were actually messaging that, hi Cheryl, and I was like, no, Cheryl is on leave.
But I'm back today. I can tell all the viewers I'm back today. Yeah, enjoying vacation, but it is so hot, Shrishti. The fact that it's not only Bombay that is sweltering, or even the city of Delhi, even down south, it is pretty hot, I must say. And yeah, it's good to be back in AC studios as of now. But let's actually bring on board Winnie, who was actually covering up while I was on leave, to talk especially about the space that she covers very closely, and that is the QSR space. Winnie, what's exactly happening in that particular counter? Give us a lowdown, because a lot of earnings have also come in for the space, and how are the stocks performing?
So absolutely, we have all those QSR names which have reported their numbers. It had been a very exciting week in terms for the QSR space, because there's a clear trend that has shaped up now, and that we were talking about is that, pizzas, the demand for pizzas maybe has been more subdued. The impact for companies which are making pizzas was more because of the prices of milk and cheese prices that have been quite elevated. So let me just take you through a breakdown of how the numbers were. Jubilant FoodWorks reported an inline set of numbers, but the like-for-like growth which they gave, which is instead of the SSSG growth, that came in with a decline of 0.6%, and the inferred number for the same store sales growth was at negative 3%. So yes, 0.6% decline in LFL and negative 3% SSSG growth. Even when you look at Sapphire Foods, which has the KFC as well as Pizza Hut brand, clearly KFC was doing better in terms of the SSSG growth. They saw 2% growth there, while Pizza Hut saw an SSSG decline of around 4%. Devyani International, similar trends coming in there, while KFC saw a growth of around 2% in terms of SSSG. For Pizza Hut, Devyani International's Pizza Hut SSSG was down by around 4.2%. Westside Food World, good set of numbers came in from the company, and look at the SSSG growth there, same store sales growth at 14%, which is surely best among the peers as well. Restaurant brand Asia also, which is Burger King, that also saw a good growth. Operating performance was quite strong for the company as well. So clear trend that we're seeing that Pizza Hut, Domino's, there the same store sales growth has seen a decline. Even in terms of commentary for Jubilant FoodWorks, they said that their near-term concerns are there because of those historic high valuations for milk and cheese, which have still continued. They could continue, so maybe margin pressure is possible even in Q1 if we go to see as well. Sapphire Food too highlighted in terms of the weak demand for the SSSG, which kept it muted because of those weak demands. Demand for discretionary has been a bit slow. And Westside Food World, on the other hand, that is McDonald's, has highlighted that they're expecting margins to come back to that 18 to 20% in 2027, expecting margins to go above that 17% mark as well in FY24. So clear trend where pizza is a bit subdued in terms of demand. Burgers are doing quite well. Valuations seem to be a bit on the higher side. But that is one to watch out for, that, is it an attractive time to buy into these QSR stocks? That's something that one should watch out for.
Well, thank you so much, Winnie, for highlighting what's all happening in the QSR space, the quarter gone by, how the numbers being reported, and what kind of a commentary we are getting from the managements, wherein we see a sort of a mixed set of commentary coming in. Some highlighted that the demand could be muted, but some are also highlighting that inflation could be seen stabilizing going ahead. But the worst is behind for the QSR space, but they continue to be richly valued and may see a time-wise correction going ahead. And that's the word coming in from Nikunj Dalmia, Managing Editor, ET Now and ET Now Swadesh. Let's listen in to his take onto the QSR space.
The most important number which markets looks at in order to understand the growth of the business is SSS. Yeah. The same store sales. In that, there is a lot of variable factors which really are at play. Frankly, if you ask me, Jubilant is growing. KFC, which owns, KFC, we don't need to introduce the product here, that business is growing. But in case you're wondering that why, if Indians are eating out so much, why you don't have a really strong trend in the entire QSR space, at least the listed ones. Do you want to guess that?
Why is that?
Indians are eating biryani.
None of the companies, health conscious.
None of the companies here actually are in the biryani business. They're still in the startup space. So the point I'm trying to make here is that these businesses, the QSR space, now it's almost like a basket of 4-5 names. They've gone through a patch of high inflation, solid expansion, and huge uptick which came immediately after the COVID as you were staying indoor and you were ordering more food. And inflation also has really managed to take a piece out of that pie. But worst for the sector is behind us. That is the sense which you're getting in terms of the demand, and that is the sense which you're getting in terms of commentary. The problem is that this entire basket is very richly priced in terms of valuations. 54 times for Westlife, Sapphire Foods, 48 times, all of them. Now, this is pretty much like valuations what some of the FMCG brands they are commanding. And for me, anything which is commanding valuation of FMCG stocks, if it's growing at 15-20%, it means that markets are already pricing that in. I think we are at the transition phase right now where you want to eat more calories rather than focusing on the health part. That is how the migration is moving in small towns as well. So I think some of these stocks, at least the QSR stocks, are looking expensive. You want to buy them, but you don't want to buy them right now. And considering where the valuations are, I guess in the near term, these stocks can go through time-wise correction as well as price-wise correction. It's a great space to be in if you've got 3, 4, 5-year view. But these are not the great stocks to buy at the current valuation.
All right, so that's the word coming in from ET Now and ET Now Swadesh's Managing Editor Nikunj Dalmia on the entire QSR space. He believes the worst is over, but the valuations still are pretty rich for all of these companies. But let's ask our experts what their view is on the entire QSR basket. Let's bring on board Kunal Botra as well as Shahina Mukaddam, who are joining us on the show. A very good morning to you, Kunal, as well as Shahina. Thank you for joining us on Buy Now Sell Now. Shahina, let me come first to you. Do you concur with the views coming in from Nikunj with regards to the QSR space? Do you also believe that the worst is over for this particular sector, but you need to hold on to if you are looking to buy into this space?
Well, absolutely. I think both Nikunj as well as Vinny, the analyst, has actually very well, put these points in place. See, when valuations are extremely stretched, like even if you see 1 year forward, it's all above 40 times, then any slight miss in numbers actually impacts the stock performance. And this is what we are seeing actually in the stocks. Some of them have actually done well. Like, for example, you had Devyani, which has given you a decent return if you're looking at a 1 year period. But at the same time, from here on over the next 1 year, I think the important point will continue to be valuations compared to the growth. And as we saw in this quarter numbers, the growth, the demand has actually slowed down. So we are seeing a lower demand over the longer term past. Also, we are seeing impact on margins. I think across the board, we've seen this impact on margins, which has actually impacted the profitability of most of these stocks. Now, I think going forward, while the EBITDA margins may consolidate, because we have food inflation which is coming down, which should actually keep the margins in a similar space over the next 1 year. I don't see a further, margins going down much more from here. So having said that, I think still the stocks are expensive, and as Nikunj put it, there's likely to be a bit of time correction. So one can look to invest, but do it only at dips and also stagger it over the next 1 year. And they are building strong brands, so there is no doubt that while currently just the incremental stores that they're putting up is contributing to growth, there will be some point in time when you will have growth coming even from the existing stores. So I think growth over the next 2 to 3 years should be decent, but at the current phase, I think there will be an impact. And also because of increased competition from ONDC, you are likely to have impact on margins for the products. You're likely to see growth stabilize, but continue to be in the mid, just in the lower double digit or mid-teen range. So I think one should buy it at dips. And I think if I'm looking at which stocks I would like, I would go with say a Devyani and even maybe a Westlife, which while Devyani did not meet the market expectations, Westlife did. But Devyani has the positives like if for example, chicken in KFC, there is not so much inflation that is likely to hit them over the next 1 year. So I think things should look better. Also, if you look at on an EBIT basis, they did manage to do better on a console basis for the quarter. So I think I would, look at these two stocks on declines.
The fundamental take coming in on the QSR space, wherein Shahina likes Westlife as well as Devyani International, and the recommendation is to buy on divs. But Kunal, purely onto the charts, because we have seen all these counters recovering from their March lows quite significantly, and you have been bullish on the stocks like Devyani International. So now, what are the charts saying to you? Would you still hold that buy recommendation on Devyani, and what's the take on others?
Good morning. First of all, I believe that the QSR space looks attractive. So I think it's a matter of the recovery which has happened to the stocks from the QSR space. Look at Devyani International, for example. The stock had fallen down to 150 levels or below that 150 mark a couple of months back. It's now got into almost a V-shaped recovery. Very high probability that the stock should scale past above 200 in this leg of uptrend for itself. Mrs. Bector or Bector Foods is the other stock which I've been recommending. That's a stock which has done exceptionally well from 450 levels to now I think around 630, 40 plus mark, the last I had seen for the stock. So many of the stocks have looked attractive. Jubilant Food could be intriguing because that stock I think has confirmed a recent breakout in the short-term charts. But even though the stock is down some 3%, 4% was in the first half today, I believe that this consistent attempt from bulls making a comeback for Jubilant Food could also turn the tide for the stock over the near term. So that's the other name which I would believe could probably be at a strong turnaround point from current levels.
All right, so that's the view coming in from both of our experts on the QSR space. But on that note, Shrishti and I will slip into a break, and not to grab something from the QSR space, one of them, but just for a commercial obligation. We'll be back soon with your queries. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Viewers, we are live on Twitter as well as on Facebook, or you can connect to us on the WhatsApp number that's flashing on the top of your screen. Do remember, while sending your query, do mention your name each time you send to us. Also, write the name of the stock that you're looking to invest in. If you're already invested in a particular counter, then do mention the buy price as well as the quantity and the time horizon that you're looking to hold a particular counter. In that way, our experts will be able to help you better. So let me get going with the first query that I have, and this one is coming from Satya. And very good morning to you, Satya. Yes, and I am back finally. He wants to know about Voltas, Shahina. He wants to switch from Voltas, where his buy price is 800 rupees per share, and he's wondering which other counter should he look to invest in. Should he make the switch to Web Global currently, is what he's asking.
I think he can switch from Voltas. We have seen that the numbers have not been, have disappointed a bit, and valuations are expensive. and he can shift to some infrastructure stock. Or I would believe it's better to stick to something like a defense, which actually should continue to do better in the medium to longer term. So I would recommend a Hindustan HAL, despite the stock having gone up, because I think the next couple of quarters we are likely to see the overall market being volatile. So it is, in my view, better to stick to larger safe stocks.
So basically, I kind of got his query a bit wrong. So yes, he asked whether he should switch out of Voltas or should he look to switch out of Web of Global, which he is holding, which is a buy price of around 320 rupees per share. So if you're saying shift from Voltas to HAL, instead of that switch, should he switch out of Web of Global instead?
Out of Web of Global also. I think there also over the next couple of quarters, I think there will be a consolidation in the stock rather than a decent return from here. So I think he can switch from both.
Okay, moving on, the next question that I have is coming from Subha Murli, and Kunal, he's holding shares of Balrampur Chini, 90 shares from a price of 383 rupees. He wants to know the short term as well as the long term target for this particular counter.
Short term wise, it's come back towards its 200-day moving average. So my sense is that maybe the stock could consolidate over here for some time. The risk reward is in favor for you to hold on to your positions unless the stock shows signs of convincing breakdown below this 200 DMA. I think you should hold on to your position. So hold is what I would recommend for Balrampur Chini.
Okay, another one coming your way, Shahina. This one is coming from Sandeep, and he wants to know about Cipla as well as HDFC Bank. He's entered both of these counters at around the current market price. He wants to know whether he should look to add some more and stay invested in these counters for the next 3 to 4 years, or do you have any other strategy that he should adopt?
Well, these are my preferred picks, both one in the pharma as well as in banking. Of course, these wouldn't be my top picks, but at the same time, I think if one is building a portfolio, both these stocks, while have not given you a decent return in the last quarter, I think, and even the numbers have been a bit disappointing, but I think the opportunity remains strong for both of them. HDFC, of course, with the merger, I think that large entity is likely to give you a good performance over the next 2 to 3 years. And Cipla also has, while there has been some slowdown in their new launches, I think they have got very strong products and over the next 2 to 3 years should do well. So I would invest at dips for both these stocks and hold for the long term.
Okay, moving on, and Kunal, the next question is from Bharadwaj, and he wants to know, can he buy BEL at this point in time? He's a long-term investor. I guess this counter was on your radar, but I'm not sure it was BEL or BDL.
No, it was not BEL. It was actually BHEL some time back. But then I think BEL is also a good buy at current levels. BEL we've been recommending at closer to 1992. I think 2 or 3 months back when the stock had corrected towards its 200-day moving average. That was a classical risk reward to buy because most of these defense stocks were going through a correction for themselves. HAL was one of the first ones to go into correction. It was one of the first stocks to touch back its 200-day moving average, and from there the stock made a fresh 52-week high and it's trading at a comfortable uptrend. So I think similar chart patterns have shaped up for BEL, Mascot, Dock, etc. And I would believe that that's the same pattern, consistent pattern, which you can follow through. You can start at current levels for BEL, but I believe that a major chunk of the quantity ideally should be bought closer to its 200 moving average. So assuming if there is any correction and the stock comes back below the 100 mark, that could be a zone where you may look to average or add more.
Talking about BHEL, then Kunal, this one is from Chandramouli. He's writing to us from Chennai, and he has around 40,000 shares of BHEL, which he had purchased at 84 rupees per share. He wants to know what's the target that he should aim in order to book out profits.
So I would believe that if the stock crosses about that 87.5, 88 mark, which it had tested in the first week of May, that strong uptrend or that single candle day for BHEL, post that we can expect levels of at least 94 to 96 for BHEL. But for that, as I said, that the confirmation has to be that the stock breaks past about 87.5 levels. As of now, the chart structure is intact for BHEL, but it's just that the stock is going through a time-wise correction for itself. So we'll have to wait out for a breakout about 87.5, 88 mark for BHEL. Post that, we can expect levels of 94 at least for the stock.
Okay, Shahina, coming to you for the next one. The question is from Parvinder Singh, and he is holding 100 shares of Indian Terrain from a price of 79 rupees. Do you track this one, and would you be able to advise him?
No, ask this.
Okay, Kunal, anything on the charts that you're spotting?
Even I don't follow the stock, so won't be able to recommend.
Okay, I'll give it a pass. Shahina, he also wants to know how is Sumitomo Chemicals for the next 2 to 3 years, and can he invest at the current market price?
Well, Sumitomo actually, most of the chemical stocks have shown a bit of consolidation rather than give you a decent return. I mean, it has consolidated. Going forward from here, I would take this opportunity to switch because with crude oil prices starting to move up again, I think the company will be impacted. So I would take this opportunity and exit.
All right. This one's coming from Pankaj, and he has CAMS. He's holding the shares from around 1,562 rupees per share. He's a long-term investor. He wants to know whether he should hold or look to exit this one. What's your take on this one, Shaina?
I would continue. I would recommend while you see a some bit of consolidation that will happen. I don't see an immediate uptick in the stock, but I would believe that it's a good stock to hold for the longer term. So I would give it a hold despite not having not being too positive on the shorter term.
Okay, Kunal, since we were talking about some of the defense names, what's your advice on HAL? Rajesh Maheshwari is holding 30 shares from a price of 2,460 rupees. What is the short-term target price for this particular counter, and should he continue to hold on or book profits?
Well, continue to hold on, I would recommend. But the only concern with the charts right now is the formation of RSI divergence, where in the previous high the stock had made at 3,000 levels on 4th of May, as compared to the high the stock made yesterday at 3168. The RSI levels are slightly lower, so maybe we'll have to wait out for a confirmation for a breakdown. Ideally, what you can do is you can keep a trailing stop loss 3030 could be a trading stop loss for your trade on HAL. Till the time the stock doesn't break below this level, you can continue to hold on, and the more it keeps on rising, the more you can trail the stop loss higher as well.
All right. So with that, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking all of the stock-related queries. So viewers, don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get to answers for all of your stock-related queries. Let's get going with all the queries then. And this one is coming from Sudhir, he's writing to us from Kochi. And he's holding about 91 shares of Affle India at a price of around 941 rupees per share. Also, he has Deepak Nitrite, 40 shares at a price of 2,101 rupees per share. Shahina, he wants to know whether he should look to hold both of them or look to exit or average.
Well, I would look to hold as of now and average only at lower levels for Affle. It's in a good space, but I think valuations still remain expensive. It's above 45 times 1 year forward, so I'll still hold it. But buy it at declines, add, and same goes with Deepak Nitrite. I think both are holds from my end.
Okay, moving on. And Shahina, what's your take on Page Industries? Subaya from Tamil Nadu is holding 3 shares from a price of 42,500 rupees. Would you advise to sell the stock at current market price or average it further?
No, I think he can continue holding it. I think in shorter term there is likely to, he could get a bit of upside. So I think he could hold it. Maybe look to review the stock at around 45,000 levels.
Okay, this one is coming from Usha, writing to us from Bangalore, Kunal, and this one is directed to you. Global Spirits, she's saying that has been going up for the past few days. What would be the immediate target for her to look to exit this particular counter, because her buy price is around 798 rupees per share?
So I think the last 2 days also indicates that the stock has formed a double top at the 1,000 mark. I think 1,010 was the high for yesterday for Global Spirits, and today so far the stock has been unable to surpass that 1,010 mark. In fact, today's high is also very similar. The candlestick pattern yesterday was of that of a higher shadow, and today as well very similar. So the point is that 1,010 is a zone of resistance. If you've bought at significantly lower levels, then I think it's a good time to book out profits, because after such a kind of a price action, we expect the stocks to get into mild correction or a bit of a pause. So you can book out profits at current levels of 985,000 rupees approximately, and wait out for a correction if you're looking to buy back.
Okay, Kunal, what's your view on PCBL? Arvind Reddy is holding 30 shares and he wants a short-term outlook from you. The average price is 112 rupees.
So I think it's a good time to book out profits for this stock as well. I don't track it very oftenly, but looking at the charts, 135 was the resistance the stock has been facing in the last I think 7 or 8 trading sessions. So 2 attempts towards 135 mark, but the stock has been unable to break out of those levels, and even on strong volume days, it's actually closed on a negative footing for itself, which means that 135 is a major resistance, and the stock would probably take a pause for at least another couple of weeks. So if the stock is unable to break past above 135, it's a good time to book out profits since you bought at lower levels.
Okay, this is from Mahesh writing to us from Mumbai, and he has about 10,000 shares of Bajaj Finance purchased at around 5,800 rupees per share. He wants to know what is the short to medium as well as long-term targets. He's asked me to ask both the experts, but let me take this one to you, Shahina. If you could share some targets that you have in sight for Bajaj Finance.
Well, it's a very expensive stock, so I would, buy it and sell it more on technicals. But at the same time, I think 6,950 is something that he can look forward to. I think the numbers also, look to be better going forward with interest rates stabilizing, coming down. So I think it's a hold and can keep a target of 6,950, stop loss of 6,200.
Okay, Kunal, the next question is from Vivek Naidu from Jabalpur, and he bought 2 counters last week. Firstly is Bharat Wire Ropes at a price of 171 rupees, and the other one is Ugar Sugars Limited at a price of 113. So, sitting at a loss in both of these counters, what's the outlook for the next 1 to 2 months maximum?
Well, trends look a bit weak for both of these stocks, Bharat Wire as well as Sugar. As I said, I think it makes sense to switch towards a formidable name from the sugar pack. Balrampur Chini could be a better alternative, and also the stock has come back towards its 200 DMA, so the risk reward would also be a bit better. Bharat Wire, I'm not sure of the immediate peer for the stock price, but I think looking at the charts, again a weak set of chart. 3rd of May, the stock formed a high of 177, and so far in this 2 days of correction for the markets, the stock has come back towards 156. So that's a sign of weakness for the stock price. I would suggest to exit both of these names.
Okay, this one is coming from a viewer, okay, Venkatesan, who's writing to us from Coimbatore. And Kunal, he wants to know if it's good to build position in Deepak Fertilizers now.
Well, Deepak Fertilizer has actually been one of the stock which has not given any major breakout. It's just gone through a time-wise correction. I think if I'm not wrong, the results or something was out for the stock price, and which is why the stock is reacting negatively today. But you look at the last 1 month of chart, it's been actually stuck into a range of 580 on the downside, and I think 610, 612 on the upside. So with this kind of a price action, it's very difficult to preempt breakout. In fact, the stock today has given signs of breakdown. So if you're looking to buy or add, then I think only about 610 is where you should look to add Deepak Fertilizer.
Okay, moving on, and Shahina, the next question is on Godrej Properties. The question is from Jay Krishnan, and he's holding the shares from a price of 1,270 rupees. Wants to know the medium-term target on this one, as well as should he add more at this point in time?
Well, I think the stock looks pretty good. Numbers are good. The sector is well in demand. So one could definitely continue to hold, and one can keep a target of 1,450, and maybe pick up at declines if there is any correction. One can keep a stop loss of close to 1,300.
Okay, this one is coming in from Ramamurthy from Bahrain, and wants to know whether it makes sense to go ahead and buy JK Tyres at current price, Kunal. Also, he wants to know when he can book partial profits in ICICI Bank as well as SBI. He's already seeing profits of approximately 20% in both of these counters.
So I'll start off with ICICI Bank and SBI. That stock, I believe, looks attractive. ICICI Bank specifically looks attractive for a 1,000 plus target. So I'm not sure if you're okay with another 5%, 6% odd from current levels, and if you're ready to hold on to that kind of a target. But I think 1,000 plus could be a good zone where you may look to book out profits for ICICI Bank. Hopefully, if this trend sustains, we can see the stock going to those levels in the next maybe month and a half. And same would be the case with SBI, maybe coming back about 600, 620 mark post, assuming the results are not negative for the stock price. JK Tyres, I would actually believe that a better bet would be Apollo Tyres. I think that stock has been one of the frontline movers from the entire pack. MRF is a costly stock. So I think as a replacement, I would believe Apollo Tyres could be a better bet rather than JK Tyres.
Okay, Shahina, what's your outlook on Mass Finance? Subrata Mukherjee is looking to buy this counter for a medium-term outlook. Would you be able to advise him?
No, I'll pass this.
Okay,
I
anything
don't
on the charts, Kunal? Because the stock is recovering from the April lows itself. So, do you expect more up move for this one?
So first of all, it's an illiquid name. I think just 5,000, 6,000 shares odd on a regular basis. In fact, today's volume so far is just 6,300 shares on the NSE for the stock. So that's a caveat, for a stock like Mass Financial. Again, a stock which is showing signs of recovery, but no meaningful breakout which has been seen into the stock price. So I think if you look at the July lows for the stock, it was at 480, recovered towards 840 mark by the end of 2022, and from there the stock has corrected back towards 700. That's generally a point of concern for the stocks which are typically a bit less liquid. So if you're okay with holding on to the stock, if you have less quantity, then I believe you can continue to hold on. But I think 840 or higher could be a breakout point for the stock.
Okay, this one is coming from NVS Rao, writing to us from London. Wants to buy ABFRL. Kunal, do you suggest buying at the current market price? And also, what sort of a target should one keep in mind while buying ABFRL?
See, price-wise, it looks attractive because after I think 8 or 9 months of successive correction from 350 levels, it's come back towards the sub 200 mark. Now, the news flow is out for ABFRL. Most of the selling seems to be out for the stock. So I believe that eventually it's got to form a bottom formation process sooner or later. So if you're okay with holding on to a slight high beta territory, because in these times when the stock is at a 52-week low, the news flow, the selling pressure is bound to be intense. But then there is also a higher probability that over the long term, these are the opportunities where a major bottom could actually be in place for the stock. So if you're okay with that kind of a risk appetite as well as a time frame, then I think it makes sense to chip into the stock at current levels.
Okay, Shahina M. Mathivanan from Chennai is holding 2 shares. Firstly, is 20 shares of Tejas Networks from a price of 440 rupees, sitting at a handsome gains in this one. And he's also holding 4,000 shares of Marksans Pharma from a rate of 65 rupees. Sitting at profit in both of these counters, he wants to know whether he should continue to hold on or book profits at this time.
Well, Tejas continues to make losses, but I think there's a lot happening in terms of the overall business. So at current levels, I would continue to hold for a further upside. As far as the other one was which pharma stock?
Marksans Pharma.
Marks and Pharma. Marks and Pharma, I think you can switch. I would prefer switching on to a medium to large cap company, something like Arvindo Pharma or a Cipla, even at current levels. So I would switch.
Okay, this query we've got from our Facebook user, and this one is from Philip George. He's writing to us from Bangalore, and he wants to know about Tata Motors. He's bought it at around 447.87 rupees per share, Kunal, around 150 shares of Tata Motors. He wants to know what should he do with this particular counter, stay put with it, look to add some more or look to exit?
Look to hold on. If you're a long-term investor, then I don't see any reason why to book out of a stock which has just gained a leadership stance in terms of the entire auto pack. So bullish on Tata Motors, have been bullish on the stock from much lower levels in a couple of years back, and would maintain the stance. So if you ask me, I would be of the belief that it's a good stock to hold on to it from long-term play. But again, as I said, that the caveat is that long-term, as well as if you're looking to hold on to it from a time frame of at least 2 years or 3 years or more, if you're okay with that, then I think it makes sense to hold on.
Okay, but for this, viewers, it's once again time to slip into a short break. But don't go anywhere. We'll be right back to take more of the stock-related queries. Stay tuned. Welcome back to Buy Now, Sell Now, show where you get all your stock-related queries answered by the experts. We are in the last leg, so we'll try to take as many queries as possible. And Kunal, coming to you for the next query. The question is from Preetham, and he's holding 100 shares of Sterlite Technologies from a price of 176 rupees. In the recent past, we did see the results coming up for the company, but post that, no significant movement. So going ahead in the short term, how do you expect the stock to react?
See, the only comfort point for the stock is support for the stock price. I think in the last 5 or 6 months, the charts which I am seeing, I think in July or August 2022, the stock took support at 140 mark on closing basis. The recent low in the month of March 2023, the stock formed another low and retested the levels of 140 on closing basis. Both of the times the support of 140 was protected, which means that maybe the stock is tapping into a strong demand or a support zone and it's finding some buyers at those levels. So 140 could be your monthly closing stop loss for the trade, and if the stock assuming doesn't break below that level, then you can continue to hold on to your positions.
Okay, this one is from Joyji Das. He's writing to us from Kuch Bihar and he has two stocks. He wants to buy PI Industries as well as Gujarat Fluorochemicals. But on the charts for the short to medium term, how are these counters looking like to you, Kunal?
So I think PI Industries is interesting. I've been following this stock over the last 1.5 odd months, specifically from the time when it formed a double bottom approximately at 2,900 mark. It's given a breakout. After the breakout, I think the last 5-6 days, the stock has gone through a correction. It's trying to fill a gap at the 3,100, 3,200 mark. So maybe wait for another 100 points odd correction for PI Industries. If it enters into that gap territory of 3,200 or below, that could be a good contra buy zone for the stock price.
Okay, Shaina, the next question is from Padma and he's holding shares of NHPC from a price of 42 rupees. We did see a good move coming in this particular counter, but at this point in time, should he continue to hold on or sell this counter?
I think there is momentum, so you should continue holding on to the stock. I would look for how much higher target, somewhere close to 50.
Okay, this one is coming in from Shankar and the location that he's mentioned is a bit of a tongue twister, so I'll give that a skip. But Shankar is asking about Saregama India. Kunal wants to know whether it should, or rather I'll take this to you. Shaina wants to know, makes sense to accumulate this particular counter for a long term, for the longer term, because he's believing that the media sector is seeing some sort of an uptick.
I agree. There's a lot happening at Saregama. At the same time, I would prefer buying it at dips, not at current levels. So do look at lower levels, say closer to 300 to add.
Okay, Shahina, coming to you for Tata Steel query. The question is from Hamza and he's holding 680 shares from a price of 103 rupees. What's your outlook for the next 5 to 10 years? He wants to know whether he should continue to hold on this particular investment or add more at the current market price.
I wouldn't look to add immediately. One can continue holding on. I think they are increasing capacity as well as with China again coming back. I think metal prices should remain stable, but not at current levels. He can add at lower levels. Look to add and then hold for the longer term. I would say look to add about 10 to 15% lower if at all you get the dip, but continue holding your positions.
With the steel space then, this one is coming from Ravi Tega, writing to us from Hyderabad. Kunal, so he wants entry as well as a target level for JSPL as well as Jindal Stainless for the short term.
So Jindal Stainless I don't track, I'll skip that. But for JSPL, I think if I'm not wrong, post results, the stock has gone through a very sharp correction. Now in such cases, you can expect a bounce, but I'm not sure whether you should play out for the bounce because the stock is showing signs of sudden correction, and JSPL has this history of going into very sharp phases of correction, especially on the back of such kind of events. So I'm not sure whether it makes sense to go for a contra buy unless you're looking out to play for just a bounce and say 3 to 5% on an average kind of returns. If that is the time frame as well as the target which you're looking out for, then it makes sense to buy the stock maybe closer to 520 levels on the spot basis. But again, as I said, look out for targets in the range of 540, 555.
Okay, Shahina, what's your outlook on LIC Housing Finance? SK Saran from Bangalore is holding 500 shares from a price of 434 rupees, and after the results we saw a sharp reaction in the negative side for this one and the trend continues. So should he continue to hold on or exit this particular counter?
Well, it's been a very disappointing stock over the long term, and I think they're losing market share, so it would be better to exit.
Coming in from Anish, writing to us from Hyderabad. I'm unsure, Kunal, if you track this particular counter, SPIC. He's bought about 50 shares at a price of 78 rupees per share. He wants a short-term view on this counter.
So that's a stock which I think is trading at 71, 72 levels. Flag pattern on the daily charts. I would suggest that if you're looking to buy, you can look to buy at current levels. If you've already bought, then hold on to it for a target of 78 to 80 levels. That could be a minor target for the flag pattern which is formed for SPIC.
Okay, Shahina, which one amongst IDBI and IDFC would be good to add for a medium-term outlook? The question is from Subramaniam from Chennai.
I would prefer IDFC as of now. While both, of course, in IDBI, there's a lot of talk going on again for the disinvestment. But at the same time, I think IDFC looks good, though it has performed. But I think it looks good even from here. So one can, in fact, I would prefer to buy IDFC Bank, given that the numbers also are very good for the quarter.
All right, the next one is coming in from Vijay, writing to us from Chennai. He wants to know about UPL. Kunal, he wants your view on this one, whether you can start buying the stock at current levels for a period of 1 year.
I've tried to track UPL many times, but then it's difficult to fathom the trend purely based on charts. The moment the stock gives a breakdown, we see a reversal on the upside, and on breakouts, it has this odd tendency of going into sharp corrections. Very difficult to preempt, which side of the breakout or breakdown would the stock sustain. So I'll give it a skip.
And what about you, Shahina? Have you been able to make something out of the fundamentals for UPL, or are you also in the no zone, view zone for UPL?
UPL, I would avoid. The numbers were very disappointing, and I think the raw material pressure is likely to continue. So I would exit UPL.
Okay, Kunal, coming to you for the next one. The question is from Kumar from Kanchipuram, and he's holding Gujarat Fluorochemicals, 75 shares from a price of 3,200 rupees. Should he continue to hold on or rather make a switch? He wants to hold this one for the next 3 years.
Well, hold. And I think on the quarterly charts, it's formed a bullish hammer over the last quarter ending March 2023. This quarter so far, in the last 1.5 odd months, the stock has shown good recovery, which means that if it continues to recover, then the stock can even go back towards the previous highs of 4,000 levels. And as it is, I think it's a stock which has a very good trend history over the last 7-8 quarters. So I think in both of these aspects, long term as well as the immediate short to medium term, I think it's a hold.
All right, this one is coming from Anju, writing to us from Dubai. Another one coming your way, Kunal. 1,500 shares of Ircon International at 84 rupees per share. She wants to know whether she should average on every dip. She wants a short-term advice.
So, I think most of the railway stocks, they rallied up 40%, 50% on average. I think some of them rallied up even 70, 75% in the last 1.5 odd month. So be ready that if these stocks get into a correction, it may not just be a 2-3-5% correction. The correction could also be maybe 15% to 20% on average. So it doesn't make sense to have an weighted average cost at a much higher end of the price. Instead of that, wait out for a correction, be more patient, let the stock come back towards maybe a 15%, 20% lower levels from the previous swing lows. That could be a better level to buy.
Okay, but let's kickstart the rapid fire session, and the first question that I have is coming from Mahesh Mutfani, and Shahina, he's holding 300 shares of Vatek Babag from a price of 360 rupees. Should he continue to hold on or sell this one?
Hold.
Kunal, Star Paper is the counter. A query coming from Pratiksha from Muscat wants to know what's the best price can she expect for Star Paper for the short term, making loss of around 12% already.
Hold is what I would recommend as of now.
Okay, Shahina, the next question is from Hemant, holding 50 shares of Zensar Technologies. Average price is 253 rupees. What's your outlook on this one? Can continue to hold on for the next 3 to 5 years? Your outlook?
Yes, it's a hold. After this big correction, I think the stock is stabilizing.
Okay, this one is from Dilesh Joshi, writing from Mumbai. 100 shares of Wipro at a price of 357 rupees per share. What should the strategy be? Long-term investor, Shahina?
It will be a hold from here.
Okay, Shahina, what's your outlook on PNB Housing Finance? Ravi is looking to add or rather buy this counter at this point in time. So how do you see this?
Well, he can add it. He can add it at slight dip if possible. Buy it closer to somewhere close to 450 type of levels to get a good return.
Okay, this one is coming from Vivek for you. Kunal Timken, buy price is 2,800 rupees per share. What price should he look to exit? He can hold for the next 3 months.
3,500 could be a better level to exit.
Okay, Kunal, Balan is holding shares of PVR from a price of 1,400 rupees. Any advice to hold on or rather make a switch?
Continue to hold on as of now.
Okay, this one is on Jubilant Foodworks. Did speak about it extensively, but let me take this to you, Shahina. 300 shares at a price of 707 rupees per share. How about averaging at current levels, long-term investor?
I would prefer averaging it at slight dips. The stock has corrected a lot, or continue holding and hold for the long.
Okay, Kunal, CG is holding 60 shares of NFL from a price of 80 rupees. What's the short-term view on this counter and should he average?
Looks weak. I would suggest not to average at current levels.
All right, and with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, Kunal, as well as Shahina, for joining us on the show, giving your take on the QSR space as well as resolving all of our viewer queries. And viewers, with that, we come to the end of this edition of Buy Now, Sell Now. Goodbye from Srishti, myself, and the team that put the show together. But stay tuned, markets at noon coming up next.